Hi guys, welcome back to the channel. I'm the Embarrassed Trader, and in today's video we're going to do a breakdown of a live trade that happened today based on ICT model, and it's just going to be a quick breakdown of the video. So hope you learned something. So today it's Thursday. We had core PPI numbers, and we have the retail sale that came out. The president of the ECB, Lagarde, she talked today, and we also have a couple of news on industrial production in China, which made the day really heavy, especially at 8:30. A lot of news were coming in the market. We had a lot of liquidity coming in at 8:30, and so when we open, we already have some movement. So from 8:30, we open here, we run up there at 9:30. Price open here at 9, and then start at 9:30, open somewhere here, and then start dropping lower, creating the opening range gap, which is the market close on Wednesday and opening at New York on Thursday. So we had the opening range gap, we trade through, we take our sell side liquidity, and around 10:30, price was struggling to run away from the opening range gap low, which I noticed, and the biases of the market. And we had a shift in market structure right here, which market shift in structure turned back into that fair value gap, and that was a trade. Throughout the week, it has been quite hard to find trade setup. My bias of the week, like I said in the last video, was bearish. I was bearish on index and I was bullish on dollar. Dollar did deliver as I expected it to, but it's just indices, they now correlate with the dollar, which is something that is unusual. Those things doesn't usually happen. Usually if dollar is bullish, index is bearish. So we had the movement from that fair value gap indicated in the last video from here, and then I was looking at to see a delivery in the high of this volume imbalance, and it pretty much let's deliver there. I don't know what's going to happen tomorrow. I think on dollar it's just going to be continuation toward the buy side, getting closer to the 105.884. In terms of indexes, I think they might continue to go higher. We do have a rollover, which means that we are ending a contract and we're starting a new contract. So about a week ago, we were trading the September contract, but now we are having rollover into December contract, which is the third week of every month of that contract. So for example, we have March contract, we have June contract, we have September contract, and we have December. And at the end, in the third Friday of each of those months, so meaning third Friday of March, third Friday of June, third Friday of September, and third Friday of December, we have rollover into a new contract. So in order to check the contract rollover, we just have to go on a website, for example, barchart.com, and we look for the market that we're trading. For example, if you look at the E-mini Nasdaq, we come here, we can see the different contract and their volume. Whenever you are trading, you want to be trading the contract with the highest open interest. So for example, here about a week ago, we had the September contract as the highest interest, but now that we're doing a rollover, everything has been shifting to we have more volume in the December contract, we have more open interest in the December contract. So that's the one that you want to be trading in. It's the same thing apply for E-mini S&P as well, which we can just see that it's basically the same thing. So E-mini S&P September contract, you look at the two interests, we have 500,000 open interest on E-mini September contract, and we have 2 million open interest on December contract. So that indicates that okay, there's more volume into this contract, December contract, instead of trading September, even though we're not at the end of September yet. But every month of each of those contracts, so for example, December until the third Friday of December, we are going to have a rollover into March 2024 E-mini March contract. So just to keep that in mind. So basically I'm not trading tomorrow because of that specific reason, and I just wanted to do that quick trade breakdown. It's a breakdown that is something that happened quite often in the market. It's just that recently the market has been quite hard in terms of like finding trades, etc. But it turned out that everything kind of just aligned in the sense of like the trade setup. So it's that same setup, but in S&P. We have the 930 opening here. We have the opening range high, the opening range gap high, and the opening range gap low. We do have the consequent encroachment of the opening range right here at 50%. And we can see that E-mini S&P open, it trades into that consequent encroachment, but it wasn't able to go below it. It struggled for couple minutes around it, then started shifting the structure. We see a shift of structure here, a clean fair value gap, which it traded back into that fair value gap. That was the entry, and the exit was just the old eye on the left. That was the trade that I personally took today, and it was just nice to see that even though market has been crazy, news, etc., we can still have good trade like this forming, and we can take it much often. So this is it for this video. I hope it is insightful. This weekend, Sunday, I will be doing a breakdown for next week video, so stay tuned for that video. And until next time, my friend, safe trading, and take care of yourself. Peace.